Hey everybody, welcome back to Chipstock Investor. On today's episode, we're going to be focusing on Google DeepMind. Is the DeepMind AlphaChip getting ready to burn the entire semiconductor industry supply chain down to the ground?
Based on some of the comments, questions, concerns that we've been receiving, it would seem there might be a little bit of belief that that's exactly what is about to happen. I hope we can put your mind at ease. We're not worried about it. We'll explain why.
Look out for these three key points in this video. AlphaChip's big breakthrough in chip design, are industry leaders entering a new era of secular decline, and no moats, fastest cars only. We'll explain what we mean by that later in this episode. Before we jump into those 3 points, though, let's talk about some of the terminology that we're going to be using in this episode. The first term that we'll describe are blocks. Those are reusable parts of the chip circuitry, and those are patented by individual semiconductor companies. Electronic design automation, or EDA, that's a platform consisting of software, hardware, and IP. You can think of some of the companies that produce EDA software, that's Synopsys and Cadence Design Systems. When we're talking about DeepMind, that's the AI lab that was acquired by Google in 2014. DeepMind is the same lab that produced the Nobel Prize winners in chemistry this year. And TPU, Tensor Processing Unit, that's Google Cloud's custom accelerator chips. Before we jump into the rest of our episode, let's get a word from our sponsor, Public.com.
So by now, you probably know that interest rates are falling thanks to the Federal Reserve's jumbo rate cut in September. They will likely be cutting interest rates further in the coming quarters, but you can still lock in a 6% or higher interest rate with a bond account at Public.com.
That's a pretty big deal because when rates drop, so can the interest you earn on your investment. A bond account allows you to lock in 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds.
And so while other people are maybe watching their interest payments shrink on their savings account at the bank, well, you can sit back and relax with those more consistent interest payments from that bond account. But you might want to act fast. That bond account yield is also not fixed. It might fall a bit more slowly than, say, savings account at the banks, but those interest rates will probably come down as well eventually over time. So the time to act on that if you want 6% or higher annual percentage yield on a bond portion of your portfolio from Public.com, time to act is sooner than later.
Check it out at public.com/CSI. Now, back to our episode. Nick, maybe we should go back to the beginning of this. What exactly is AlphaChip and how is it transforming, as this article claims, computer chip design?
Well, you can read about it yourself with the links in the description below. The first is the press release from Google DeepMind. Keep that term in mind, press release. We're going to come back to that when we explain how Google actually monetizes this chip design transformation. But the longer write-up and the documentation for how an engineering team might actually put this to use is found in Nature, an article that was published in nature.com. It's actually an addendum to the original AlphaChip write-up from a few years ago. So what Google is doing here is they're using this AI, a type of AI called reinforced learning, or RL, to place the blocks in their tensor processing units, the TPUs that they use in Google Cloud. Google illustrated what's going on with this little video here. On the left-hand side is an illustration of AlphaChip trying to place these blocks, these logic blocks, building blocks of circuitry that make up a chip, trying to place them in such a way that all of the copper wire interconnects line up. And on the left-hand side is with no prior training. And on the right-hand side is after the reinforced learning algorithm has been exposed to several generations of TPUs. And you can see how it's able to put these copper interconnects and line them up much more quickly after it's kind of learned the ropes, you could say, a little bit.
So I guess we can think of reinforcement learning as something that we do, right? If we're in Algebra 101 and then we go build on that and go to Algebra 202, something similar.
Yeah, exactly. And so why is this important? Well, let's take a look at this picture here. We've described on the show before that semiconductor chips are sort of these microscopic little cities of these little skyscrapers of features. Some of them are called transistors. Those are the on-off switches that create the binary code that software is based off of, the ones and the zeros. And then connecting those layers of transistors are microscopic copper wire, the copper interconnects. And the blocks are the individual building blocks of these circuitry that are repeated many times over and over to create the entire chip. And so if you look at the picture in the bottom right of a silicon wafer, within each little square, you see those little patterns, geometric shapes and patterns. Those are different blocks. Some of it might be a logic block or maybe a block that performs some other type of function. And those things are strung together and layered on top of each other. And there may be many dozens of these blocks, and the most advanced chips may contain millions of transistors, some of them billions of transistors now. And so if you think about billions of transistors, copper interconnects for all of them, it's humanly impossible, even for an entire team of engineers, to hand design a modern chip. That ship sailed a long time ago. That's why EDA software has come into play. EDA, the A being automation. This process is largely automated.
Maybe an illustration that can help us understand this is think of those little blocks like building a skyscraper. You're probably not designing every single space, every office, every room by hand. Most likely you have a few different designs that you can replicate over and over again. So AlphaChip isn't designing individual offices or apartments or blocks, but rather it's helping the engineer place those individual blocks in a way that makes sense on the chip.
I like that illustration. Hopefully that makes sense. Let's take a look at a couple of graphs that Google put together to illustrate what exactly they've been able to accomplish using AlphaChip with the placement of these blocks in their latest TPUs. So we have 3 generations of TPU, the V5E, V5P, and then Trillium, their 6th gen TPU. You can see they went from AlphaChip being able to place a total of 10 logic blocks in the V5E, and now they're up to 25. And then in so doing, you can see what AlphaChip has been able to accomplish over and above what the engineering team, without the assistance of AlphaChip, has been able to accomplish in reducing the amount of copper wire length. So they were able to reduce it by about 3% a couple generations of TPU ago, and now with Trillium, they've been able to reduce the copper wire length by 6%, over and above what the human engineering team has been able to pull off. So we're not talking about complete game-changing engineering here. I would call a 6% reduction in copper wire length an incremental improvement. So I think that's why I wanted to highlight the fact that this Google DeepMind report was a press release. This is, to a certain extent, marketing material to help Google attract customers, especially to Google Cloud, because that's how you're going to be able to access these custom accelerators, these TPUs, is if you're a customer of Google Cloud.
At the beginning, DeepMind developed AlphaGo and AlphaZero. Both of those were used to play games, Go and chess, respectively. But that wasn't the end-all, be-all in this AI algorithm. They wanted it to do something more. And that's exactly what this first point that we're speaking about is. This is all part of this new breakthrough from Google DeepMind. So with this breakthrough, and as Nick mentioned, this is an incremental breakthrough. Still amazing, but we have to have tempered expectations for it. But does that mean that traditional chip makers are going to start to decline because of this?
Now, this is, I think, where it gets tricky and where investors get antsy, because whenever there's technological innovation that has the potential to change a particular workflow, we definitely need to take note. However, Google DeepMind developed with AlphaChip the ability to more efficiently place blocks. But you have to ask yourself, who designed And who owns the patents? Remember, patents, it's this IP. Logic blocks, that the building blocks of chips are patented. Someone owns that IP. And in this case, for Google Cloud's TPUs, the owner of the logic block is Broadcom and also possibly Marvell Technology. It seems like it's possible that Google Cloud gets some help from both chip designers when it's designing these TPUs. But we're going to focus on Broadcom here specifically because since the beginning, the TPU really could not have been accomplished in the first place back in 2015 when the first gen TPU came out without those patented logic cores, those logic blocks from Broadcom. So are we entering a new era where the status quo is going to completely get ripped out and replaced by big tech? Absolutely not. In fact, quite the opposite could be argued here. Big tech wouldn't even be able to do these amazing things in the first place without a very, very large helping hand from big chip designers like Broadcom.
And you can see that the power a hardware business like Broadcom holds in this. They are able to patent their work, and then Google has to be very careful about these patents. Earlier this year, Google had to settle out of court with Singular Computing that claimed that the data center architecture that Google was using was actually their own. And this data center architecture, in fact, saved Google $10 billion. So big tech like Google has to tread very lightly when it comes to intellectual property or patents. Patent infringement is a very serious business.
Mm-hmm. And this is an interesting case here. It's unrelated to what we're talking about with the TPU and the blocks that are paid for use from Broadcom. But this Singular Computing isn't even really a company. It's just one scientist, Joseph Bates, who had developed this architecture for data centers, able to get a pretty, I mean, we don't know what the payment was exactly from Google, but we can suffice to say probably a pretty sizable payment out of court just to one person. It just illustrates the power of a full-blown chip designer like Broadcom that has many, many patents on lots of different parts of a data center, on lots of parts of how software operates within that data center. A company like Google, as deep of pockets as it may have, tens of billions of dollars of cash, lots of tech capabilities of its own, obviously. But even with all that power, don't bet against a company like Broadcom or NVIDIA, or as we're going to talk about here momentarily, Synopsys or Cadence Design Systems. They also have very, very deep wells of resources in patents and IP that protect them from potentially game-changing technology like AlphaChip.
So I think this leads us to the question, is Google trying to compete with these other companies? That is a question that we have received here at Chipstock Investor pretty frequently, and I can see why people may think that. But that's not the whole story, and we'll tell you why.
Yeah, this, big tech competing with big chip makers has almost become something like a media faux pas. That's not what's happening. And Google DeepMind itself admits this. So we pulled this slide from the Google Research GitHub repository. And this one is the frequently asked questions section for AlphaChip. And a couple of clues here that we hope this helps you understand why Google isn't actually trying to compete against chip makers. And the first is that AlphaChip is open source. Anyone can use it. Anyone can make changes to it, as long as they give credit to the researchers that were involved with this project.
The second hint is, what is Google actually getting from this? They want better chips designed faster at a lower cost. Google is the most powerful data center computing business in the world, and of course they want more for less.
Yeah, they're not trying to design chips and then sell them. They just want the chips so that they can go get more customers, places where they do monetize their business, like collecting Google Cloud Rent. More on that in just a second. The third hint, though, companies like Synopsys, Cadence Design Systems, and NVIDIA are all working on AI for chip design as well. And they're all using methods very similar to AlphaChip, very similar to that reinforced learning, or RL, method for AI that DeepMind used to develop AlphaChip. And so if AlphaChip really does continue to improve, a company like Synopsys or Cadence or NVIDIA could actually adopt it because it's open source. But at this point, the reinforced learning isn't something proprietary to Google DeepMind. So all of the leaders in chip design, be it an actual chip designer like NVIDIA or the software companies that help with that EDA, electronic design automation, are all working on similar things like this. And they have been already for years.
And one final point on how Google or Alphabet is making money on all of this, they don't really care that it's their TPU or even NVIDIA GPU that's running in their data center. What they care about is landing a sale. They'll take it. That's how they're monetizing, as Nick mentioned, not by competing with NVIDIA, Broadcom, Marvell, etc.
Yeah, it's all about cloud rent. And this is very much related to your work that you've been doing, Kasey, in health tech. Pretty much every health tech company that I feel like you've been researching as of late, when you boil it all down, a lot of the research and development these days is accruing to some cloud platform like Google Cloud or AWS or Azure or Oracle. This is kind of just the world that we live in right now, unfortunately. A lot of research and development dollars are migrating to some sort of cloud-based workflow. And so this is the kind of stuff that Google hopes to land new customers with when they can talk about their latest generation TPU designed with something really amazing like AlphaChip. And oh, by the way, they also have another very similar AI called AlphaFold that does something somewhat similar, but for protein discovery. It's kind of all interconnected.
Get it? Interconnects, interconnected.
No pun intended, sorry.
So is this existing supply chain done for? Actually, no, just the opposite is taking place. And that's where we'll get into the third point. No moats, fastest cars only. And we'll explain what we mean by this. We shared an illustration on Chipstocks podcast. If you hadn't had a chance to listen to that episode, we'll link it here. But we need to quit talking about moats in technology. It's more about who has the fastest car and who can get into the pole position.
It's not that we don't care about moats, but a business that has some sort of defensive moat is a conversation we need to have for a more mature industry or a sector of the economy that's not all about innovating as fast as possible. So maybe the portion of the semiconductor industry, maybe mature chip manufacturing, maybe like power chips and sensors, we could actually call that an industrial business, an industrial sector type of business. And maybe we can talk about defensive moat and how a company can just kind of defend what it's built and maximize its profit off of that. But when you're talking about high tech, if you try to develop a moat and then sit back and relax, you're not going to last very long. Eventually others will catch up, or the technological landscape will just shift out from under you and you're going to get left behind. And a perfect illustration for this is Formula One, which I think all Americans probably are pretty well aware of now thanks to the Netflix series. I think that's kind of when Formula One entered our consciousness.
Yeah, Drive to Survive. We're all fans now of Formula One.
As Brett said over on Chit Chat Stocks, at the very least, a bunch of Americans are now fans of Drive to Survive on Netflix, if not Formula One itself. But statistically speaking, if you look back at the history of Formula One and a lot of sports that involve some sort of race and timing, if you're at the front of the line, statistically speaking, you have a very high probability of winning the race, of making it past that period of technological innovation where you can then, once the innovation period is finished, then you can sit back and relax on the moat that you've created. This is a pretty wild statistic. So in Formula One, you have 20 cars on the grid. And so if everybody had an equal chance of winning, you have a 5% chance of winning the race. But on average, going back decades, the car in pole position at the front of the line, the fastest car, actually has something like a 40 to 50% chance of winning the race. When we're talking about high tech, it's all about constant and never-ending innovation. You want the fastest car with the best management team and the best race car driver guiding that business in that race. And so let's talk about Synopsys and Cadence Design Systems, the two, far and away, the two leaders in EDA software. Are they still innovating at a fast enough pace to maintain their pole position as new innovations like AlphaChip come out?
Synopsys and Cadence Design Systems are most definitely still innovating at a very fast pace. Synopsys, you can see in this slide, has a broad IP portfolio and software that is chock full of AI in order to design all kinds of things on the semiconductor. Here's a case in point. It's not just AlphaChip that's using AI in new ways. This is a recent press release from Synopsys and Taiwan Semiconductor Manufacturing. Not only can Synopsys AI help with the placement of blocks within a chip, its AI also helps with the entire manufacturing process and with the development of entire data centers. I think Synopsys is going to be okay. Let's talk about Cadence.
Very similar press release with TSMC and Cadence. Historically, Cadence does a lot of its EDA with the actual placement of chips on a circuit board. That's also a difficult problem to solve, figuring out how you fit all of the different chips and components onto a shrinking circuit board, because everybody wants a smaller footprint circuit board. It means less power consumption, and it means better performance. Cadence is using AI for the placement of those chips on the circuit board, and they're using AI to develop new things like chip-to-chip interconnect, things like photonics. And then again, like Synopsys, that AI is going to the manufacturing floor to help speed up the process for a company like TSMC that receives the ultimate design from the engineering team and now has to figure out how to manufacture it as efficiently as possible. Kasey, I'm pretty certain Cadence is going to be just fine as well. They have a fast car and they're innovating quite rapidly. And that shows up in this final slide. You can see in the last few years, the market has picked up on this fact. Right? Cadence and Synopsys both have been rewarded with a much, much higher earnings multiple than they have had historically on a price to free cash flow and a price to earnings basis. We're just showing you 1 year forward expected price to free cash flow here.
Yes, Cadence Design Systems and Synopsys are both historically have very high valuations. However, even though these are two of our favorite stocks, it doesn't mean there's no risk involved with them. Last month, we talked about the business cycle for both of these companies, and even at the bottom of the down cycle, their valuations still remain quite high. And so that's a bigger risk than any singular AI development from Google DeepMind.
For us, I think as long as Synopsys and Cadence maintain that pole position, they keep innovating at a fast pace, we're happy to continue owning. We're curious to see how things pan out here at the start of a new growth cycle for both of these businesses. Again, please, if you're interested in these two companies, check out the last video about Synopsys where we break down the cycle for the company and what that does to the valuation that you're looking at on this final chart. We're curious to see how this pans out here in the next quarter or two. We're warming up to the idea of firing up a dollar cost average plan again on Synopsys and Cadence. We put that on hold at the end of 2023. So stay tuned for that, especially when earnings season gets rolling again here. For the time being, Kasey, I think these businesses are top innovators in the semiconductor ecosystem. And at best, I think something like AlphaChip, it's open source. If it's really that good, Synopsys and Cadence will grab it and insert it into their software suite some way, somehow.
I think it's possible that EDA software sometime in the future will no longer be considered tech. We'll actually migrate it over to industrial. And at that point, maybe we can talk more about moats.
Agreed. For now, fast cars only.
Thanks everybody for watching this episode. Make sure you hit the subscribe button. We really appreciate it. And check out our Semiconductor Insider membership, just $5 a month. It gets you access to our Discord server with all of our show notes and live Q&As and lots of great discussion. Everyone take care. Have a great rest of your day. See you soon at Chipstock Investor.